Hi, Lenore here, and we're going to do or finish exercise 2-9 on page 86, and we're doing part A, which is I'm trying to read it to you right out of the book. Journalize the transactions in a 2-column journal using the appropriate number to identify the transactions. Now, your authors say journal entry explanations may be omitted. And that's only true when you're doing your homework. When you're doing something in an exam or a quiz, for me, you're going to add the explanations. So again, let's do number 1. So this is where we are going to put number 1. We don't actually have dates. Sometimes you will have dates in the future, but that's where we're going to put number 1 to let us know that's the first transaction. Build customers for fees earned. Build customers. Again, there's no cash involved, but the relationship is between the corporation and a customer, so that means we're going to use accounts receivable. Fees earned is the revenue. We increase accounts receivable with a debit. We increase fees earned with a credit. The thing to remember is with a journal entry, debit accounts, the counts we're going to debit always go first. So I'm going to type that in, accounts receivable, 73900. And if you hear some thumping in the background, that's my cat running down the hall. And for the credit or the fees earned, those would be indented. So the debit always comes first. The credit is indented, and of course you can always tell where the column or the number is. And then your author said to please omit the explanations. I ask that you don't. So here we would just type, it's just a brief, build customers for fees earned. That describes the transaction completely. A few words as an explanation. So number 2, purchase supplies on account. Supplies, that's an asset. We're going to debit that to increase it. And I'm going to put in parentheses that that's an asset, just for you to remember. And then since we're working with a vendor, right, because we're purchasing supplies from them, we're going to use accounts payable. It's a liability, and it is used when the relationship is between the corporation and a vendor or a creditor. So we can just write purchase supplies, because we can see that it's on account because of the account that we're using. 3, received cash from customers on account. As we spoke in the last podcast, we're going to increase cash because cash comes in, so that's going to be a debit. So a debit to cash in the amount of 62,770. And because we received this cash from our customers, we're going to decrease or credit accounts receivable. And again, same dollar amount. And our explanation is going to be received cash from customers or received payment, something like that. I'm going to put from customers, if I could spell it. Great. So that's number 3. Now let's do number 4. Paid creditors on account. So again, we're using the relationship is between a creditor and the corporation, so accounts payable is going to be used. And cash. Paid means cash goes out. That means cash is the credit. So we're decreasing cash and we're decreasing the amount that we owe to the creditor. So the debit is to accounts payable in the amount of $820. The credit is to cash, same dollar amount, $820. And our explanation can simply be payment or paid creditors. Okay, so we have our, let me take this freeze pane out. So we have our 4 journal entries, and one of the things that everybody loves with journal entries is that you can just add up all of them on the page or on your Excel spreadsheet. So total debits 139,450. Total credits 139,450. Now you might be thinking to yourself, well, Lenore, why aren't those numbers the same as these numbers? And the reason for that is we're adding up all the debits. In this one, we only added up the debit balances. So that's the reason why the two numbers are not the same, but all our debits equal all our credits. Okay, so the third part of this problem is to assume that the unadjusted trial balance shows a credit balance for accounts receivable. Does this credit balance mean an error has occurred? So the unadjusted trial balance shows a credit balance for accounts receivable. Well, let's go back and look at the T account. There is no credit balance for accounts receivable, but it's saying assume that this is true. And the answer would be no. It would just mean that we decreased or had more cash applied. Now I'm thinking this would be the correct answer if we had done chapter 7. So with chapter 2, you only knowing about chapter 2, then the answer would be yes, it suggests that an error had occurred because we wouldn't want customers to pay more or to give us more cash than for the revenue that they pay, the services or the fees that we provided to them. So a credit balance would mean that an asset account has a credit balance, which would mean more decreases than increases. That would certainly look suspicious. So with that said, Lenore out.